Vijay, do these deals look too aspirational for you? You know, powering a metaverse that doesn't exist yet and self-driving cars, or is it exactly what you want to see from these companies?
Thanks for having me on, Kelly. No, I do think the metaverse and virtual reality is picking up, and so many of these names like NVIDIA, AMD, Synaptics will all stand to benefit from this metaverse virtual reality trend. And so you're seeing Facebook get into virtual reality with metaverse. You have Apple probably next year, and also you have Sony and HP all getting into the virtual reality space. So it'll be a huge tailwind for the chip suppliers. We do like NVIDIA, AMD, Synaptics, like we mentioned. Also, Avago, kind of a good player in that space, enabling the cloud there as well. So.
Does the price action lately concern you, Vijay, just the absolute lift we've seen in the last week or so?
Yeah, I mean, not concerned, but I would say there are some new drivers in the space in terms of virtual reality. This is VR 2.0. We had VR 1.0 about 10 years back. It was a flash in the pan, came and went. But I think now there is a whole new push, especially with Facebook's metaverse avatars and virtual reality meetings, especially in the post-COVID, post-pandemic era. So it's a whole new tailwind, drives a lot of cloud computing backend, very good for the hardware guys. So,
am I right to infer, Vijay, that if you don't have exposure to AI or the metaverse or virtual reality, and you're a chip company, you are at a disadvantage?
We would definitely say AI and ML and cloud is probably one of the biggest drivers for the next 10 years. But that said, look for other enablers like wafer fab equipment. Semicap Group has been on fire, right? I mean, when you look at AMAT, Lam, you have every chip company in the world adding supply, foundry guys adding capacity, sovereign nations trying to bring in-source manufacturing. So it's a huge tailwind for the Semicap Group as well. And don't forget the whole electrification EV vehicle trend as well. So there are some three major mega trends, I would say, over the next 10 years that drives the semi-supply chain. And the OEM.
So you follow the chip area and also automotive technologies. And I guess a big question that a lot of people have, they've been hearing that you can't get cars because the car makers can't get chips. When does that chip shortage end for automakers? And what will it mean for the chip companies?
Yeah, good question there. I think we have been long that supply chain, shortages and the constraint cycle there. What we see here is some of those supply chains are starting to open up. So where the semiconductor supply chain and the auto industry had benefited from the tight supply, very big backlog as OEMs spread orders around, now you're starting to see the supply chain open up. I think, you've probably seen the biggest foundry in the world, TSM, talk about that they don't see a supply constraint on the chip side from their end. It's more a packaging issue with Southeast Asia supply chain where, Thailand, Philippines, Malaysia, etc., saw shutdowns with COVID. But as that supply chain opens up, you're starting to see chip supply improve. And we have heard commentaries from Toyota, GM, Ford, all talk about chip supply has improved, production is picking back up. So I think if you look at that supply chain, we were long that with the shortages. Now that the shortage is alleviating, might be you want to pivot away from those because you now have a headwind of supply coming on, pricing being a little bit of a headwind now, which was a tailwind before. So the backlog starting to look a little bit more shaky. And so you want to rotate into the growth secular stories like AI, ML, and the semi-cap equipment. So,
Vijay, thanks so much for joining us today to talk through all of this. It's good to see you.